What is going on, guys, and welcome into the video. So I know many of you guys saw my last video about the stocks I'm pouring six figures into, but many of you asked about the stocks I would run from immediately, so I figured we could talk about those today. I don't care if some of these are popular among retail investors or anything else like that. I have to be honest with you guys that I'm avoiding them like the crazy stalker I used to have in high school. Not trying to be controversial here, but I just cannot act like all those stocks are good deals right now and are going to the moon. I'm sorry, I just can't do that. So I will run through the four that I'm avoiding, but I will also tell you exactly what to do if you happen to own any of these stocks, or honestly, any stock you feel is a mistake, because that is important as well. So I will give you an actionable plan for what to do with those stocks too. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. Now, to be upfront, I am not looking down on anybody or saying what I pick is right and what you pick is wrong or anything else like that. However, I do see significant headwinds for these companies, and being beat down into oblivion is not one of the headwinds that I'm talking about here. I may get a lot of hate, and that's okay with me, guys. It really is. My channel is small because I give you the truth, and I'm not a hype channel where everything is going to the moon, so that's kind of to be expected, getting a lot of hate. But if you do happen to own any of these stocks, I'll tell you exactly how to handle it. But go ahead and comment down below with the stocks that you avoid like the plague, so that way we can all just kind of share on the stocks that we all avoid. So stock number one I would avoid is any airline stock out there. I mean, seriously, take your pick. But to me, they have been bad businesses for a very long time. And I don't know if they will ever return to consistent profitability again, much less be a viable business with actual long-term growth. That is a very tall order with an aging fleet of aircraft and rising prices across the board for their business. And with the customer experience being better than ever, and that was sarcasm, guys, it's not better at all, it's actually terrible. And flying honestly being so painful now, it does not bode well for any meaningful growth in the future. Heck, with rising prices in some cases, flying private is actually cheaper or about the same price as buying a first class ticket, so the big revenue generators for airlines, meaning the business class flyers, have started migrating towards private instead. I mean, honestly, think about it for a second. If you could show up and not deal with all the crazies at the airport, avoid all the lines, and then get on a plane with, I don't know, 10, 15, 25 people or so, instead of several hundred, and not have to wait in all the lines on the back end to get your baggage and all the other hassle that comes along with it, wouldn't that be great? Oh yeah, and they don't lose your bag, nor do they have overworked and understaffed employees, who I honestly feel bad for having to deal with all the people who kind of forgot how to act in an airport, along with all the airlines' cost-cutting measures, which, of course, they're still losing millions despite all those cost-cutting measures, and making the airlines a terrible experience overall, which of course just agitates all the people that are there to fly, and then those understaffed and overworked employees have to deal with those agitated people. And you kind of see how the spiral just kind of gets worse and worse and worse and worse and keeps going down. Now, I'm hoping I'm wrong, because I miss air travel being somewhat fun and the airlines actually having their act together and people knowing how to act in an airport and having it all happen for a reasonable amount of money and a, not so bad of a price. The only bright side to owning airlines is if they get in too much trouble, they will get bailed out, as they are considered vital to the country and to the economy. We must have air travel going. But just because the government will bail you out and you are vital doesn't mean you're a great company or stock that I personally want to own. So stock number two I would avoid is Peloton. Can somebody explain to me why this stock is still popular and I'm still seeing bullish articles and commenters on TV using this stock and saying it's great and all that sort of stuff? Like, I just don't get it. Yeah, I got it. It's down like 80+% or whatever the heck it is. I don't even look anymore because it's just not worth looking. But that doesn't make it a good deal on a stock either, just because it's beaten down that much. I just don't understand the play here at all. Outside of a complete buyout scenario, not a minority buyer, but outside of a complete buyout scenario, this is a dead stock for a very long time, if not forever. Now, there's no doubt they're nice machines, but it's a niche product for a niche market, and it always will be. And I know I can't pronounce that word right, guys, but you just kind of have to go with me here and help me out. Just go with me. And no, I don't care one bit about the Amazon deal either. It's not like they need to be on Amazon for brand awareness or to have a place to facilitate the sale of the bikes or anything else like that. Never mind the Amazon deal. That does not negate the fact that any growth is based on people being willing to buy a really expensive piece of fitness equipment and then sign up for a subscription on top of that and keep that subscription going. This business model in the fitness industry has been done before, and it's the same exact result every single time. It becomes a fad, grows massively and unsustainably, and then when that fad ends, the company dies a slow and painful death because it can never recapture that fad again. Hence why it's called a fad. Bottom line with this stock, You are strictly gambling or trading if you are buying it in hopes that they get bought out or something else like that. And even then, there's no guarantee that you will come out good on top. And I'm not a trader, so this makes no sense to me as a long-term play. So stock number 3, and this one's probably going to get a lot of rile-up comments in the comments, that would be Bingo. I said this was overvalued at $8, much less the $15 it eventually hit, and it got me a ton of hate, people telling me I didn't know how to invest, and they were unsubscribing and subscribing to real investors who were hyping this stock up. Now, just for perspective on what was going on then, whenever I said that, they had no revenue at the peak of this run, were expected to delist just a month or so prior, and it was a $4 billion market cap. $4 billion, guys. I've seen penny stock runs before, but $4 billion with no revenue was just crazy. And honestly, it's still at a crazy market cap of around $750 million on revenue of just $6 million. There are literally NBA bench players, guys sitting at the end of the bench making more money than Bingo does. And kind of for more context here, guys, Tattooed Chef, and I know it's not everybody's favorite, but I know it's one that a lot of you guys know about. They have a market cap of around $600 million, so it's smaller than Bingo's, but it has revenues worth $58 million just last quarter, and it wasn't a good quarter for them at all. At Bingo's pace of revenue over the past year or so, it would take them 2.5 years to make as much revenue total as Tattooed Chef did in 1 quarter. Think about that for just a second, and you can pull example after example just like this. Now, I personally really do hope what they're doing actually delivers and generates the kind of numbers needed to justify this valuation, because what they do is actually really, really cool. But for now, it's firmly in the extremely overvalued territory. And I know I heard all the talk, guys, they're going to change the world. But guess what? You can cure cancer, but if the product is not profitable or approved or nobody buys it, that stock will go nowhere. So to me, this stock is still firmly in the speculative category, and in this type of market, those aren't places that I like to put my money. And if you want to avoid buying complete hot trash stocks, and you want to have complete and full access to me anytime you want, and a group of 6- and 7-figure investors, and you want to see my buys in real time, exclusive videos, live Q&As, and a ton more, you get all that in the Market Insiders private group. And there's actually a secret project, well, it's not secret to group members, but secret to you guys out there, that is almost at completion that will drop for our members that they cannot wait for. And I might have also put a discount code up early too if you want to be part of it and see it when it's released. And no, it's not going to be a forever sale. It's only going to be for a very limited time. So make sure you check out the pinned comment if you're interested. And on to the final stock, and that would be AMC. I know it's another stock that's probably going to get me blasted down below, but you guys know I have to be honest with you. And I know the apes are strong, and the initial push was awesome to see, but it kind of quickly spiraled out of control with the apes and other people that were supporters of the movement actually spewing more misinformation than the hedge funds were spewing. And I'm sorry, not a lot of people watched the video. You can click up here for it. But $100,000 per share is never going to happen because, one, the bad guys know the rules better than you or the SEC, and you know darn well the SEC will find nothing because it's the SEC. And two, even if they had to cover, that would mean AMC would be worth more than the entire stock market combined. I mean, we're talking trillions upon trillions of dollars here, guys. And the only person that could cover that short would be the Fed. So the whole premise of the ultimate squeeze that would make you rich was impossible to begin with. And the latest dividend of ape shares smells like more ways to screw over the retail investors to me and keep the company in power or position to limp along the business and continue to draw massive paychecks. And honestly, I think that's what it is, so I just don't feel good about it at all. Nobody in that line of business is doing well, and management's only major move to help the business is to buy a gold mine? It's literally one of the most baffling moves ever by a management team, but it goes right along with all the craziness involved with this stock in general. It's basically a train running wildly off the rails, and when it wrecks, it's going to be spectacular, but until then, there will be months upon months of fascinating content and talking points to discuss. So I will gladly stay away from buying this stock as I don't need any more drama in my life. So what do you do if you own any of these stocks? If it were me, I would have to make some tough decisions, but I need to answer these questions before making those tough decisions. So question number 1 is, did I do a valuation? And if so, are my assumptions on that valuation still valid? Did I buy based upon a video or article? Which then you have to be honest about, did you do proper due diligence if that's all that you did in the first place? If not, it's okay to admit you didn't do that, then put in the work, and if you still see it as a mistake, then you might want to look at selling. This happens to all of us, but you cannot determine a mistake until you do the work. Which leads me to question number 2, Did I buy these stocks with an actual plan? And if you didn't, then you need to make one immediately. Plan your exit if it's now or 5 years from now. Just plan it out, where the money is going next, and all that good stuff like that. And the final point I want to make, and I guess it's not really a question now that I think about it, but the point I want to make is you need to understand that not every stock is right for me, but that doesn't make it wrong for you too. Maybe these stocks we talked about today are just a small part of your portfolio and speculative plays are kind of fun plays. Or maybe you're just a high-risk crazy person, so you're comfortable owning high-risk, kind of hero to zero type stocks, then maybe all these stocks do fit your plan. This is why answering those questions is so vital and so key for you to answer. It is completely possible those stocks will thrive and my horses that I picked will fall. It is possible, guys. But when I work through my plan, my analysis, these stocks did not fit and I see better opportunities out there. And this video right up here shows you my top 4 horses I'm targeting right now. So hopefully this was helpful. And if you don't know how to get a price target or how to do a valuation and want a step-by-step process for doing that, building wealth, and you want direct access to me and much more, remember to check out the pinned comment down below to become a member and at least look at everything you get. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.